Welcome to Realcast, the weekly roundup of the real asset markets and our first edition of 2022. I'm joined by our regular team of Nicole Dines, Dan Innes and Paul Strome. Paul, what's caught your eye over the last 7 days?
Well, Richard, 2020 and 2021 seem to have established a number of new patterns. Obviously, investors' increased demand for logistics space is well documented, but its status as asset of preference was confirmed this week by INREV's Investor Intentions Survey. This revealed that in 2022, 71% of investors will be allocating funds to the sector, ahead of offices and residential, both of which registered 69%, and retail, which is being pursued by only 36% of investors. The survey showed that there are still substantial sums allocated to real estate by institutional investors who plan to invest at least 68.2 billion euros in global real estate this year, with 61% of investors planning to increase their allocation to property during the next 2 years. But while investors are still committed to property, clearly, something that the real estate news over 2020 and 2021 seemed to show is that investors are looking at assets in a less siloed way. They have, and it's overused, but still moved out of their comfort zones. Obviously, they've looked beyond the standard offices, shops and sheds for a while, and we all know that alternatives are becoming more significant, but they are also looking more creatively at some of these things. So while German real assets investor KGAL has had an infrastructure arm for some time, this week it announced that it has bought into one of the suppliers of wind turbines and solar farms. It's acquired 25% stakes in GP Joule projects for each of two funds, in part to take advantage of the immense growth opportunities offered by renewable energies in Germany. Another example is Aviva Investors, which is investing £100 million in the provision of digital infrastructure through funding a broadband provider in the UK's southwest. It already invested £75 million in the company. Obviously, these are not property investments, but they're investors getting further into the infrastructure area of real assets. We've also seen traditional property companies doing their lateral thinking turn this week. British Land made a second strategic investment in Fifth Wall's Climate Technology Fund. The fund invests in climate-focused technologies affecting real estate's carbon footprint throughout its life cycle, such as innovative materials, demolition, building operation, and recycling. British Land said that the latest investment will enable collaboration with other global real estate and technology businesses to find innovative solutions to the climate emergency. Altogether, there's a lot more lateral thinking on, which looks like making 2022 quite interesting, Richard.
Yes, I thought there was a lot of interesting detail in the INREV report, including signs of a pickup in the retail sector. Nicole, what have you been following?
Well, I had a look at the Italian market, which seems to have started the year, with a bang, and the real estate market, and two big events in Milan. MilanoSesto, the sort of huge 1.5 million square meters regeneration project on the site of the former Falck Steelworks, is finally getting off the ground because of a 500 million euro financing that is coming through Cale Street, which belongs to the Q8 Investment Authority. So with the financing in place, Hines, which is leading the development, is actually starting excavation works this month, and construction work on the first phase. The first 7 buildings will start before the end of the year. So this sort of long talked about project is actually getting off the ground. And Hines emphasized that it's very much a social project. They said the social infrastructure is crucial, so it's very much in tune with all the trends that we talked about recently. So regeneration is actually happening. And in Milan, again, another big project which has been talked about forever. Everyone has heard of San Siro, the iconic football stadium in Milan, which has been in use since 1926. It is now going to be replaced. The municipality of Milan officially agreed, gave Populous, the architecture firm that's been responsible for the Emirates Stadium and the Tottenham Hotspur Stadium and the Olympic Stadium in London. So they've got a lot of experience in that kind of field. They've been given the contract to build this new stadium, which has already been called the Cathedral. It's going to be huge and very sustainable, and again, in line with current trends, it's going to be in the middle of a park, a pedestrianized area with green spaces, fitness spaces for citizens, so it won't be just a sports stadium. But what is interesting is that construction will begin alongside the existing stadium, which has to remain, San Siro has to remain in place because it will host the opening ceremony for the Winter Olympics in 2026. So they're going to build the new stadium sort of next to it, and then after the Olympics, they will demolish the whole stadium, leaving only one column as a legacy aspect. So that's been very controversial in Milan, because obviously San Siro was much loved, but the decision has been taken, and the new stadium looks spectacular from the from the CGIs that we've seen. But as we know, Milan has been the focus of international investors' attention in Italy. But interestingly, this week, Turin came up, is now on investors' radar screen, it seems. And again, its biggest foreign UK investment in Turin real estate was announced. Zetland, a private equity company based in London, has invested 100 million euros in 2 buildings in central Turin. One is a 70s building that's going to be demolished to turn into residential, and another is a period building from the 30s it's a mixed use. It's got offices, retail, and residential, both in the center of town. And it's interesting because it's foreign investment in a different city. It's not Milan, it's Turin. And also this focus on residential, because Nomisma, it's a study in its study of the Italian real estate market, it predicts that residential will do very well this year in Italy. Its demand is at its highest since 2000.
Yes, very interesting to see the continuing activity in Italy, which was also, of course, a theme throughout 2021. Dan, what have you been following?
Yeah, I've been following some of these really useful summaries that many of the magazines have been publishing on, what lies in store. One particularly good one at the very start of the year from Property Week, which is worth going back to look over the sentiment right across the sector. But news-wise, this week, in UK office news that broke on Friday, the 50-50 joint venture between Mitsubishi Estate and L&G, Legal & General, they've finally sold that Central St Giles development in London's West End at Tottenham Court Road to Google for 762.5 million after a pretty long pursuit of that site that goes back a few years. And that, of course, is in addition to the Google development in King's Cross at the moment. So Google really showing a lot of commitment, not just to the UK, but also to office space. Cushman and CBRE were involved, Cushman for Central St Giles and CBRE for Google. But Google's now going to have enough office space for 10,000 employees across all of its UK sites, including the King's Cross development when that's finished, that scheme that's affectionately called the land scraper instead of a skyscraper. So yeah, major news in the UK office market there. But elsewhere in the European residential market, US private equity KKR, they've just confirmed that they've agreed to acquire a portfolio of 14,400 resi and commercial real estate units that are worth over €1 billion from Adler Group. I mean, that deal is part of the German group's plan to deleverage their business. But in terms of KKR's interest, I mean, the assets, they're mainly resi, but they're located right across Germany's major cities, and they're going to be managed by KKR's portfolio management company, Valero. Valero is a fully integrated platform for resi and asset management, so a very capable team. But yeah, I mean, as a result of that, Valero's portfolio, that's grown now to more than 23,000 resi units, which puts a lot of UK portfolies into context, doesn't it? But it makes it one of the largest privately held real estate companies in German resi real estate market. And then sticking with resi, but a bit closer to home here in London, the build-to-rent firm Get Living, they've secured a £365 million loan for the second phase of their redevelopment of the former Elephant and Castle shopping centre site in South London, which many of us will think of linked with Lend-Lease. But for this loan, Starwood Capital have provided a 5-year term loan that's going to enable Get Living to create 485 homes, 172 of which are going to be affordable. But that regeneration project at Elephant and Castle, it did have a few false starts, with the first plans submitted in 1997. That first phase was completed in 2017. That's what I've been following.
Yeah, the investment by Google is certainly positive for the London office market, but will also be a positive sign, I think, for the office sector more widely for 2022. Thank you, Dan, Paul and Nicole. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the real asset markets.